So, there is a lot of debate out there in the retail crowd over which is better, SoFi or Robinhood. And it seems like Robinhood has really taken off and started making announcements right and left that prove it's going to destroy SoFi, right? Or at least that is how the narrative goes out there. So let's take a look at this debate and get you guys the truth without the hype about all of this, as there are some major flaws that everybody seems to be missing in this debate. So let's talk about that, and I'll also tell you who I think the big winner will be in the end. Just make sure you like the video if you like getting the truth without the hype, because that's what we're going to get today, guys. We're going to get right down into that. Now, if you're serious about taking your investing to that next level and you want to work directly with me to do that, the summer sale ends today for my group, where you get to keep that pricing for life and get your free coaching, free courses, see every move I make in real time, my complete watch list with price targets. Guys, there's so much more. We'll talk about it at the end, but it's the pinned comment down there for those that are interested. All right, so to me and kind of what I've observed, this is a debate that has divided the retail crowd up, but the truth is we're kind of fighting amongst ourselves. So let's discuss the flaws in this debate to begin with, because I think once we identify those, I think you'll see that we should be having a very, very different discussion than what's going on right now. So number one, is Robinhood willing to trade high margin for low margin? So think about this here for just a second. Robinhood obviously is big in crypto. It's high margin, guys. Brokerage is a high margin business. Options and all the other games that you can play around options and all the other different things that they allow you to do within the app are all high margin businesses for Robinhood. Now, are they willing to take a big margin hit to add in a bunch of lending, which has much lower margins than crypto and all the other things that they're involved in right now? Remember, this is one of the big driving narratives that's out there, is the fact that Robinhood's just going to do everything SoFi does, just better. But I'm not sure Vlad and the team over there want to get involved in all these different products, like lending, for example, that carries a much lower margin. Same thing with business banking. It is far more lucrative than regular banking is. But again, they don't have a charter, so they're super limited in what they can do with that. More importantly, it's still lower margin than their other business lines are. So even when you get into a lot of those different business lines that SoFi is already in, for Robinhood, either they can't get involved with them because they don't have the charter, or even if they kind of do the backdoor way of getting involved in a lot of different things, they're really low margin. So do they really want to have their margins erode to bring on a lot of those products? And obviously some of them become, basically kind of like loss leaders into some of their, higher margin products. I would agree there completely. But a lot of what SoFi does not do that at all. I've noticed people just simply focus on what we see consumer facing. And for me, that's not going to be the biggest driver of SoFi's profits in the future in regards to that. But on the flip side, that will be a massive driver for Robinhood in the future there. So you're almost kind of not even comparing apples to apples at that stage. And we're not even talking about things like regulation, for example. Does Robinhood want more regulation, which of course hurts margins, makes things harder, everything else of that nature? Do they want the same level of regulation and scrutiny that SoFi currently has? It's something I haven't heard anybody mention, but yet that's absolutely a fact with these two stocks that you have to understand. Now, SoFi is not regulated like JP Morgan, for example, but they're absolutely regulated more than Robinhood because of the charter and because of everything else that comes along with that charter. Does Robinhood want to engage and start taking on products that would invite more regulation, which of course, in the end, hurts everybody's margins? That's across the board, guys. Now, you can start going down the rabbit hole in banking, and you quickly, there's all kinds of banking products. I understand banking for me is kind of a passion. For a lot of you guys out there, you just think banking is just simply, I go down to my branch, I deposit my check, they got checks and credit cards and all sorts of stuff like that. Banking is such a vast and massive world. And more importantly, the big money is in all the things that you and I will never see. And if you don't understand how a lot of those products work and how banking works in the background, it's not going to make any sense to you anyways, and you won't see the opportunity there, and that's okay. But once you start running down those rabbit holes with that, and you kind of realize that to expand into that world, they would be sacrificing a whole lot, and the CapEx would be massive compared to what they have right now whenever they roll out products, and it won't be easy as they've expanded out so far. Like a lot of their expansion that they've been doing has been very easy. And of course, if they want to continue to expand it in the future in a lot of those areas, they can continue to do that. And it's really easy for them to do. But if they want to expand and a lot of the banking things that SoFi is into, I'm not talking consumer facing, I'm talking about behind the deal there, business, a lot of other things of that nature, it is going to be much harder. And of course, on the flip side of that, SoFi can expand into Robinhood's lanes, and it actually increases their margins and requires very little infrastructure to kind of execute towards. It's not as big of a jump. I'm not saying they'll do it as good as Robinhood or anything else of that nature. That's not what I'm saying at all. But one jump, SoFi's jump into Robinhood's world, is much easier than Robinhood's jump into SoFi's world as we continue to play this out. So number two, they're not taking from each other. I know it's a popular thing on here on YouTube, and it always has been, really the past 5 years I've been involved with it, to where, oh, this company, or for this company to succeed, this company over here, they have to be taken from it, right? In order to expand Robinhood's market share, they have to be taking from SoFi. That's just kind of what's out there, and it makes no sense at all. When I look at this and I view it from the lens of, oh yeah, by the way, I also own all the big banks. I'm also listening to the earnings calls. I'm listening to what Jamie Dimon says in all his different letters, and everything else involved with all that. I've been involved with banking for over 25 years. All of those things kind of put together show me that Robinhood and SoFi aren't taking from each other at all. They're taking away from big banks. And oh, by the way, big banks don't want the businesses that they're taking. So it's a win-win across the board. And this idea that, oh, Robinhood's going to get into checking accounts, so therefore people over here in SoFi checking accounts are just going to jump over to Robinhood checking accounts, is just simply silliness. I don't know why this type narrative drives, but it's statistically not showing up in the data. And more importantly, it's not supported by anything the management teams are saying or anything else of that nature. There's nothing there outside of just simply a narrative that somebody's created that makes some sense on the surface. But when you actually dig into the reality of what's going on, it doesn't hold any weight at all. You're hearing the same exact thing right now with Google. ChatGPT's eating its lunch. It's taking away market share, but somehow Google search went up 10% last quarter. Double-digit growth in a legacy. I mean, it's not like I didn't know search could grow that much in a quarter, but they did. So how in the world is ChatGPT taking from Google search if Google search grew by 10%? The math doesn't math, guys. It's just a silly argument to where they're taking TAM from other areas, or it's just new TAM altogether that they're taking, and therefore they're not taking from each other at all. And therefore that's the reason why you're seeing ChatGPT grow great, and you're also seeing Google search grow great as well, because they're taking from a much larger pie that's out there. It is not this crazy zero-sum game, which leads me to number three, which is zero-sum investing is silly. I think I've figured out why us as retail believe this, even though it is one of the dumbest things that I ever hear, is that everything is a winner-take-all race to the end, or whatever the case is. It is simply silly, but I think it tracked all the way back down to, or at least it got popular here in the retail crowd, back when Kathy Wood said the EV race is a winner-take-all to the top, and there's only going to be one EV company out there. No, there's not going to be multiple car companies like there was. It's just going to be one. And of course, everybody was banking on Tesla. And it's just like, I was back there saying, no, there's probably going to be 20, 30. Some of the legacy auto companies may very well go away. Some of them are going to consolidate and continue to, move forward. You're also going to have all the Chinese EV makers and some other folks that will rise up and also take market share as well. So you're going to have a lot of different winners in the EV space, not just one. I mean, was there one winner of the internet? No, there will be hundreds of winners. Same thing with AI. There will be hundreds of winners with AI. Some of them are current companies. Some of them will be new companies that we never heard of. And more importantly, whoever the heck figures out how to monetize it, there's probably going to be thousands of ways to monetize it, just like there's thousands of ways to monetize the internet, just like there's thousands of ways to monetize YouTube. There's thousands of ways to monetize all kinds of things and be a winner in those spaces. And so zero-sum investing, like, oh, it's only SoFi can win or only Robinhood can win, kind of those folks who kind of want that fintech banking, kind of hybrid that we got kind of going there between these two. Only one of them is going to win. It is simply silliness. It doesn't hold true in any industry. And more importantly, in this one, it's so early and there's so much TAM to go. How the heck can you make that decision who's going to win it anyways? And yeah, man, you sure as heck will be a massive winner if only one company is the winner. But my guess is there's probably going to be, I don't know, 5, maybe 10 winners in this space, maybe more. We don't know, but I can guarantee you it's not going to be one winner. That's one thing I know is not going to happen there. But yet us as retail, it is the first thing that we latch onto. One of the first things that we latch onto is, oh my gosh, this company started doing something that this company did over here. Oh no, my company's in trouble. It's going to lose. This one over here is going to win. That is that zero-sum mentality coming in, and it is simply not true, and it is silly to apply that to your investing. Number 4, they are two completely different businesses. All right, let's get some basics out of the way here, okay? Robinhood is not a bank and cannot play in the banking world in all the ways that SoFi can. High margin banking happens in products that SoFi is doing, and Robinhood can't play in since they don't have a charter. SoFi won't be as good as Robinhood in crypto and a lot of the trading stuff. I mean, Robinhood just seems to have that on lockdown, and SoFi tends to take their time and let stuff play out. And Robinhood just kind of pushes forward and kind of lets the chips fall where they may. But when I look at the two companies, I look at their core businesses, what they do. Yes, there's some similarities, but to me, they are completely different businesses, completely different business models, really, with obviously the goal ultimately to increase share price and increase profits and everything else, but they're going at it two completely different directions. Let me give you guys an example here as to where I saw YouTube freak out, where I saw nothing. Now, when I heard about all the exciting things that Robinhood was doing, when they had their big announcement, I don't remember, it was a month or two ago, whatever the case was, maybe a little bit longer than that. I was excited when it got posted in my group. And of course, there was a lot of talk about it, a lot of other things. And it was really neat. I personally was reading through it and going, wow, I'm really excited for our Robinhood shareholders in the group. That is, really, really good for Robinhood. Not once did I think, oh no, I got a big SoFi investment instead and it's in trouble. Not once did I think that, because I see them as two completely different investments, completely different businesses, and I still don't see any reason why folks are making this an either or discussion or anything else of that nature when I really look at the two companies and I see two completely different companies. I don't know, it's kind of similar to, Microsoft's tech and Apple's tech, so therefore they're kind of direct competitors, but kind of not. They're two completely different businesses altogether. So an announcement from Apple doesn't crush Microsoft and vice versa. It's kind of the way that I view it there, but a lot of folks like to just lump them all together and be like, oh, well, yeah, Apple decided to do this, so therefore Microsoft can't do that, or they're going to kill Microsoft's business over there, or vice versa. And it just kind of turns into a lot of different silliness like that. And to me, that just doesn't make any sense at all. They're completely different businesses, run completely different ways with different goals, different everything, different product lineups, the whole nine. So yes, there's some similarities. I would agree there. Sure, they are targeting some of the same demographic groups. Absolutely. So are 9,000 other companies as well. So kind of keep that in mind. It's not this very, very small thing. There's thousands of companies out there doing the same exact thing. So for me, I've got to look at the businesses. And when I look at the businesses and the way and the kind of map that they're going and the way they've chosen to take their businesses, they're two completely different businesses altogether. To me, don't have nearly as much correlated. Definitely not enough to where one has to win and one has to lose. I don't really see a whole lot of similarities whenever I go down that route and I start actually dissecting the businesses. Sure, on the surface, just like the Microsoft Apple, you can go, well, they're both tech. So see, they're similar. Well, they're both fintech. See, they're similar. It's a lot deeper than that when you start digging through the weeds and you actually get into what they do, what they offer, and ultimately what they can do in the future. So who wins ultimately and who loses? All right, my answer is going to make some of you guys angry. I'm sorry, but you guys come here for the truth without the hype, and that is exactly what you're going to get. And more importantly, if you're looking for to the moon or, oh my gosh, this is the 1000x stock that's next, and this over here is not going to do anything, and all those other things that retail, for whatever reason, want to hear instead of the actual truth and what an investor sees, then I'm sorry, the answer is going to make you upset, but it is quite simple. The answer is, why can't both be winners? I mean, if I told you 5 years from now, one was up 1,000% and the other one was up, 1,100%, 1,200%, whatever it was, did anyone really lose? I mean, sure, I agree, one is better than the other, but did anyone who invested in either actually lose? My answer is no, because losing to me is, one of two scenarios here. Is if one goes up 1,000% over the next 5 years and the other stock goes zero. I mean, goes nowhere or goes down during that same long-term time horizon, which I don't see that happening for either company either. So to me, the big loser in all this is the person who tries to trade this or get into one and then get into the other and start chasing, hey, this one's got momentum, it's running, let me FOMO into it. And then, okay, it's lost its momentum and it's actually trending down, but now this one's starting to pick up. Let me jump over into that one. Those folks will be the biggest loser over the long run. Now, maybe not in the short term. I agree there completely. I've been in that spot many, many times before where I was the loser in the short term, but over the long run, statistically, the person trading will underperform everybody who just bought and held. So over the long run, that's how you end up being the biggest loser, is by chasing and getting in and out, playing all those different trading games that everybody has you out there doing and chasing this and chasing that. It just never works out well over the long run. So for me, it is much more important for you to understand your fundamentals, have a plan, buy and not play all those other trading games and all those other ridiculous games that are out there. That's how you win over the long run. And if you want to learn exactly how to do that, learn exactly that from me, make sure you take advantage of the summer sale that ends today, guys, where you get to keep that price for life, where we got free courses, we have free coaching, be a part of the best 6, 7, and 8-figure Discord out there, guys. I put out 3 to 5 videos a week just simply for the group there. Of course, you can talk to me anytime you want. We do Q&As at least weekly, sometimes more. Slide into my DMs. There's so much involved, so much content. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.